Hi everyone, today let's talk about Apple earnings, as well as Amazon, and the economic factors. Then we'll get into the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So moving over to Apple earnings, obviously they did well, mostly driven by services growth at 8%. They beat estimates, $1.26 per share. Revenue also beat by a little bit. iPhone missed a little bit, which we did talk about that potentially being the case. And I do think this is going to continue to soften in my opinion. Mac revenue beat, iPad revenue missed by quite a lot actually. Other products missed. Services revenue, this is the big driver here. This software as a service revenue is high margin. You can see that here. They're doing really good on margins, and I would expect that to continue. As long as they can continue to grow services revenue, that's where they're going to make most of their money at this point, in my opinion. And they continue to put out good guidance on their service projections. Moving over to Amazon earnings, they also did quite well, showing double-digit revenue growth. They're up about 10% after hours, massive beat, earnings 65 cents versus 35 expected, revenue $134 billion. Web services beat, that's their big driver of growth right now. Advertising also beating. They've laid off around 27,000 employees, which was some record cutting from Amazon, and that's starting to pay off in their earnings, doing quite well. And they also mentioned the fact that their Prime Day, this last iteration, was their biggest ever, showing continued growth. Cloud unit growing by 12%, again, one of their bigger drivers here. AWS accounting for 70% of that $7.7 billion in operating profits. And overall, everything is continuing to do well here with Amazon. Moving over to the economic calendar, you can see jobless claims came in at expectations. Global services PMI slightly lower, but above the 50 line. Non-manufacturing PMI also lower than expectations, but still above the 50 line. Non-manufacturing prices came in higher, which is not what you want to see. That's pointing towards a little bit more inflation. And then you can see Fed balance sheet offloading another $36 billion this week, continuing to offload as you would expect from the Fed. Moving over to tomorrow, we have average hourly earnings, non-farm payrolls, unemployment rate expected to be 3.6%, and that's going to wrap it out for the week. Moving over to max pain, you can see it looks massively different now. We're at max pain of 452, put wall still at 450, so that's interesting. Some decent puts at 453, but we're stuck just below that 450 level. I would honestly expect a little bit of a rally, potentially into this 451, 452 area for tomorrow. Put call ratio dropped significantly down to 1.7, still right around a million options. And like I said, I think 450, maybe all the way up to 455 makes sense. That would be a pretty strong rally. I wouldn't expect to close at those highs, but maybe another $1 or $2 of upside on the SPY. If it decides to break this 450 put wall, you can see a finish all the way down to 447. That would be interesting. I just don't think that's going to happen. Moving over to the charts, starting off with the S&Ps here on the hourly and the daily. You can see we came into this level, 448.74. We touched that after hours yesterday, held that level, touched it again after hours today, and then we're rallying a little bit off that level. We have a weak trend line just above there, 449.91, and then you can see I have a medium one up here at 452.45. This does seem like it's holding in a little bit of a base, might rally up to the 55 and then maybe get a rejection from there. I still think this is kind of the initiation of a downtrend, but we definitely found a little bit of strength today, held in the zone, starting to look like a little bit of a rally into tomorrow's session on the shorter time frames. We'll see how that plays out tomorrow. Daily chart still looking very weak, gap down, through a wick, got rejected. You can see these more powerful trend lines sitting basically right where we're at on the daily chart. It'll be interesting to see if those end up holding or not. You can see this big one here marking the tops from February of 23. We broke out from that level and now we're retesting, waiting to see if this is going to hold, maybe culminate in a double top off of this previous high, then get the bigger rejection. That would be interesting. If this doesn't pull back at all, that would be a little bit surprising in my opinion. We're still working off of that catalyst. from the debt downgrade. Momentum still bearish. RSI getting close to that 50 line. Maybe we get the initial bounce at the 50 line and then a little bit of a rally from there. Definitely something interesting to watch. Could go either way on the SPY. I'm still bear biased off of this previous down move and the downgrade, but the big earnings today were pretty positive. Moving over to the NASDAQ, you can see a very similar thesis to the SPY. Chopped, touched that level, rallied a little bit, pulled back into the end of day, rallying a little bit after hours on the earnings announcements. Still trading within the zone, 376.45 down to 372.85. And based on this setup, you would expect a little bit of bullishness going into tomorrow's session. Daily chart, however, still showing bearish momentum, bearish RSI. And even if this rallies a little bit tomorrow, I would expect that to be met with weakness and ultimately looking for a pullback down to that 55 EMA on the longer time frame. Moving over to the Russell and the Dow on the 4-hour. Russell going sideways, throwing some wicks to the upside, still holding up pretty strong. We got the cross on the EMAs, and this is definitely a downtrend. If we can get above 195.15 tomorrow, hold that level and then start to rally, that would be interesting. But right now we're just below that level. It's still acting as resistance on this chart. Dow also showing weakness below the 55 EMA. Got a big wick, got a rejection, rallying a little bit with the Apple earnings. We'll see how it plays out, but still trading 350.92 up to 353.62. Still looks like a clean double top. Took out this midpoint here, and I would expect this rally to be met with some sellers tomorrow. Moving over to Apple and Tesla, you can see Apple falling after hours now on their announcement. Got all the way down to the 200, down at 186.79. We're back at this previous consolidation. We talked about this area in here might hold, but I said I didn't expect it to. It ended up pushing down to this previous support, wicking that level. Momentum bearish, RSI bearish. Might hold in this zone and rally a little bit, but we'll see how that works out tomorrow. Tesla rallying off of the 200, hitting the 21 on the 4-hour chart. Soon as it got above 255.43, you could have traded this to the upside a little bit. Again, still a downtrend on the shorter time frame EMAs, but a little bit of bullish momentum. RSI getting close to that 50 line, maybe looking for a push up to 264.68. Moving over to Microsoft and Amazon. You can see Microsoft is actually below all of the EMAs and SMAs here on the 4-hour chart, so this is definitely a downtrend. Had a little bit of a consolidation and rally after hours here today. Momentum looking to flip towards bullish a little bit. We'll see if it gets above 330.03, potentially look for a push up to the 21 at 333.08. That would be interesting. But you have to respect the fact that we're below all of the EMAs and SMAs. They're not quite in order yet, but this is definitely looking weaker than it has here recently. Amazon, of course, getting that massive bullish push with their strong earnings and better than expectations push on cloud earnings. If we extend this trend line out here, it's right in that zone now. We'll see how that plays out tomorrow. Honestly, I would expect at least a little bit of a pullback, maybe down to 136. That would be interesting. But of course, good earnings, nice little rally there. Moving over to staples and discretionary. Staples pulling back a little bit, looking to retest the 55 EMA after we hit it on Wednesday. If that level holds, we can expect a little bit of a bounce. If that breaks down, I would expect a much bigger move down to around $74.30 or $74. Discretionary, obviously rallying super strong with that Amazon announcement. We're back into this zone here, 170.68 up to 174.76. We'll see if we can get up to that upper range and potentially look for a breakout. But right now we're still in the range. Moving over to breadth here on the 50 and the 200. Breadth absolutely cratering on both charts. Bearish momentum, bearish RSI on both charts. 50 got down to that 55 EMA like we talked about yesterday. You could absolutely see a little bit of a bounce from that zone. Maybe retest 77.46. Pull back down from that level. That would be interesting, setting up a lower high here. Either way, this looks super bearish. But you could look for a little bit of a bounce tomorrow. 200-day, same thesis, rolling over, took out that first level, coming close to that 62 level. If this pulls back down to the 55, that would be pretty substantial, down to 58 here on the 200-day average. And that's certainly possible in my opinion. I don't know if it's going to go straight down. Could absolutely see a little bit of a bounce, maybe a lower high or a double top setup. But either way, on both of these charts, looking super bearish going into tomorrow's session. Moving over to yields, 2-year going sideways, 10-year rallying super aggressively, taking out this previous high, taking out the high from March, right in this zone here from October and November of last year. When yields were this high last time, we were at the most recent lows. If we start to see a reversion here and this continues to rally and the 2-year starts to pull back, we get a reversion on the yield curve that could start to signal that recession potentially coming up, and that's going to trigger a down move in stocks in my opinion. Moving over to the dollar index here on the 4-hour and the daily, pulling back a little bit down into that level between the 9 and 21 here on the 4-hour chart. Got a doji on the daily chart. Momentum is still bullish, but on the 4-hour chart, we got bearish momentum. RSI crossing below the SMA. Definitely looks like we might see a little bit of a shorter term pullback, maybe down to 102. That would be interesting. But either way, this trend is still intact. Just looking like a shorter term pullback right now. If the 21 breaks, then we'll have to entertain some lower prices on the dollar, but we're not there yet. Moving over to JNK and TLT, both of these cratering. JNK gap down, held at the 91 level. Big breakdown from a consolidation, does not look good. TLT, this is the weekly chart, so you can see we're right in this most recent low from October, pulling back majorly, took out all of these levels, looks super bearish. I wouldn't expect this to stall out before we got into these previous lows. And that's if we stall out here. This still looks super bearish, still right at the bottom of the candle. Momentum super bearish, volume big on this week. Moving over to the volatility indices, MOVE index rallying aggressively with the big move down in TLT. VIX threw a big wick up to that 1750-ish area, pulled back to the 9 EMA. We're right in that zone where it needs to hold if it's going to rally. Momentum starting to roll over. RSI right at the SMA. Again, if it's going to hold, you really want it to hold here. Start to throw that bigger wick up to the 1850 area. Certainly could break down, pull back into this zone, set up a lower high, and then rally again. That would be interesting. Back up to that 1850 area. Last time we were in that zone, it was going back to May of this year, so we've had lower volatility. Looks like we set up a nice base, big gap up, and I would expect this to go higher at some point over the next week or two. Moving over to my accounts, I did fairly well on the day, 392, so I'm actually very close to break even on the week, which is good. Looking at my positions here, I didn't really change my 393 put, still holding that nice little profit. I would expect that to expire worthless tomorrow. We'll see how that one plays out. Qs, I rolled out my puts and down once again, down to 376 and 377, out to Monday. We'll see how those play out. I also sold a call here today, 375. I expect that to expire worthless. We're just below that price right now, and we were below it at the options exercise time as well. I also have a 378, which expired worthless, so I should get quite a bit of credit going into tomorrow's session once these are taken off the books and I get to keep that credit. I do have a 377 on for tomorrow. We'll see how that one plays out. The market's rallying a little bit on that Amazon earnings, but Apple is down, so they might offset going into tomorrow's session. Plus, breadth is down quite a lot. I still have those short shares here, so I'm still okay. And I have that as a covered put down to 376. So I'm looking to get a decent profit on that with those credits that I continue to hold on those puts. We'll see how that plays out. If we get a decent rally, I might take off this 377 put for Monday. Either way, still playing defense, trying to get out of these for some decent positions and get some decent credits in the short term. And then you have that one XOP position rallied back today. Honestly, I was going to take this off at the end of the session, but I did not get filled. Still sitting up pretty nicely at 143, and I would expect that to expire worthless tomorrow as well. Let me know down in the comment section what you think of Apple and Amazon earnings. Is Apple going to pull the market lower while Amazon buoys us up? Which one is going to win? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.